There is an awareness growing of businesses that we can't just keep taking and taking from a natural environment. We've got to start putting back in, otherwise it's going to affect our businesses. Our argument is that if you don't know what your impact and your dependencies are on the natural environment, you don't know that your business is going to survive. I think our philanthropic community isn't thinking in terms of these catalytic ways that they can use their spending. They fund conservation projects when they could also be thinking about, how do I use my money to crowd in more private sector capital? We need to get private sector capital moving. We can't rely on the public sector alone. And so we're just working on these two kind of pathways to making that change. We call it nature, and the pushback we get from lots of billionaires and asset managers is that it's so wishy-washy, and it kind of is, because nature is like everything, it's our entire planet. But if we don't invest in what's called our natural capital, so our forests and our soils, then we have no planet. But getting people to kind of understand that we need to invest in our natural capital is really quite challenging at the moment.
Helen, thanks for coming on the show today. I've really been looking forward to speaking with you because this show will be a bit different kind of discussion for me because you are not a capital allocator. I think this will be only the second time that I've had someone who's not an investor on the show, but rather we're going to do a deep dive into the Green Finance Institute, which is a well-known and highly regarded organization in the UK that plays a unique role in increasing capital flows into profitable, sustainable investments. But we'll start, like I always start, by getting a backdrop to your journey to where you're at now and to how you ended up becoming a leader in multiple natural capital initiatives at the GFI. For listeners who don't know you, could you please describe your childhood growing up in the UK, which I think this story starts in Southend-on-Sea, which is in Essex. And I'd also like you to talk a little bit about your parents or your family and any other formative experiences you had growing up that might have influenced you to this type of work around natural capital and nature investing, just to give us all a little bit of color so we get a good idea from where you've come and your journey to the sustainable investing industry.
I grew up in village, I suppose. Sounds more charming than it actually was, outside Southend-on-Sea, which is a seaside town on the Thames estuary, actually, about an hour east of London. And, we had a very tiny garden. So I'm trying to think about what my connection to nature was at an early stage, other than my dad had grown up on a sort of small holding. So he was really interested in nature, and he used to take me out to the clay pits and we'd collect frog spawn and then we'd bring them back, and he built a little pond and we'd look at them in probably no more than a 20 foot by 20 foot garden in the little suburb, I suppose. It was more than a village that we lived in. So I was always, I think like most of us, into nature, love nature. It's very rare. Always a bit suspicious if you meet someone who says they don't like nature. So I don't think I was any different to anyone else, actually. It was kind of probably always at the back of my mind. And ended up on a route of studying economics at school and doing terribly at it, actually. And then went to college not to study economics because I didn't get into any of the places I wanted to study economics. I studied foreign languages.
Where did you study economics then? Was that in your primary or secondary schooling?
In my secondary school, yes. I actually wanted to be a writer and a teacher, and realised I probably wasn't that good at writing either, or at least I had a confidence crisis. And everyone I knew were all the sort of male friends I had were on a trajectory to, which was very typical for Southend-on-Sea at that time. You get your A-levels and then you'll work in the city as a trader, or you'll go to college and do economics and then come back to the city to work at an investment bank. But I thought, well, I'll do economics, and I just wasn't any good at it.
Went to a girls' school?
Yes, yeah.
Was this a public school or a private?
It's a state school.
Okay.
You don't pay fees. It was in Essex. They have a system where you sit an exam when you're 11, and if you pass that exam, you will then go to typically a single-sex school for the rest of your time. It's this very strange model.
So explain that. I don't think I knew that. You actually got directed that way. How is that?
It's not in every county, I don't believe, but you go to what's called a grammar school. Certain counties in England have a system where 11 years old, you can take an exam called the 11 plus. And if you pass it, you go to grammar school and it pulls people in from a larger area. It's still a state school. It's not paid for. And they typically, at least they were in my neck of the woods, are single sex schools. So I went to an all-girls school. My brother he passed his 11 plus, he went to the all-boys school.
In 1996, you were off to Leicester and attended the University of Leicester and earned a degree in, wait for it, French, German, Italian.
I should be living in Switzerland, like you, Scott.
And some
really,
kind of literature. Yeah, you could actually be a politician here.
That was my degree, and it was a lot of fun, as you can imagine. And I lived abroad and worked abroad as part of that degree. But then when I graduated, it was 2000, and there was a recession around that time and not many jobs around. And the job I got was back in London working for a company called Thomson Financial. It's now Thomson Reuters. There I became very quickly a journalist. I worked for IFR, was the magazine. And then I was a financial journalist for 20 years, more than 20 years.
Now that first job was a bond and markets reporter. Were you interested in that, or were you interested in paying your rent?
I always wanted to be a writer. So the first job I had at Thomson Financial was I literally just called people up and in French, German or Italian, asked them at various asset management firms what their asset management strategy was, and then wrote it down and checked their phone number. And that was not a job that I particularly wanted to continue. But they owned IFR. And so they said, well, if you're interested in writing, why don't you go for a role at IFR? And so you take what you get. And it was a wonderful firm and lovely, lovely people I ended up working with. But yeah, I wrote about Swiss bonds. Maybe it was there. Yeah, I don't know. Maybe
well, that's like watching paint dry.
Or even worse, commercial paper. Which is also quite dry.
You landed about a year later as a reporter and pension and investments reporter.
It just got more and more exciting.
Well, you're just going for that glamorous life, aren't you?
You can imagine down the pub when we were all talking about our jobs, just how interested everyone was in mine.
Was this all in London?
Yeah, it was until I moved to New York with Euromoney. But
and then in 2004, you eventually moved to Euromoney, where ultimately it seems like you stayed for a good bit of time, something like 17 years. So what prompted that move to Euromoney? And then you fairly quickly, I think, had an opportunity to move to America. So I'd be interested in how that came up and what that was like.
I joined them to cover global private banking. So I covered private banking and philanthropy. And Euromoney at that time was such a wonderful place for a young journalist to go because they let you travel anywhere in the world. Like they just let you off in your mid-20s, just go around the world. So it's a fantastic job. And then I started covering hedge funds a bit more and went to New York on a work trip and just kind of decided, you know what, I'm in my mid-20s, I cannot afford to buy a property in London. I'm a journalist, so the chances of buying a property are limited. Why don't I ask if I can be transferred? And so I was, and it just so happened as various people left, I became their North American editor, so covered investment banking. In addition to still keeping an eye on the private banking work, wealth management, I started covering investment banking more fully there.
The financial crisis hit while you were there. And then sometime after that, you moved into sustainable finance journalism. So tell me about that experience and what you're feeling at the time.
I mean, it was an interesting time to cover investment banking because, you know, they were, at least in their eyes, the gods of the world before that financial crisis, and certainly spoke to enough people that they would tell me how they were changing the world with what they're doing. And I never bought into it. And equally, because of the work I was doing in private banking and philanthropy, I could see that philanthropy wasn't doing a great deal. I mean, this is a broad brush I'm painting here, and there's incredible philanthropic organizations, but there were issues with philanthropy. And you could see what I didn't witness so much in England, and might just be by virtue I grew up in a sort of middle class neighborhood, was the wealth disparity that you see in New York and the States. I mean, it's striking. And so I started to sort of really I never really fell in love with finance anyway. It was like a means to an end. But I really started to question what its value was. But I could see that there were people in all the banks, because I had the privilege of meeting with the CEOs of all the banks and like heads of investment banking and heads of commercial banking, because I covered everything for North America. There were people in those banks who were really trying to get money allocated for social good and some for environmental good. It was still quite early at that time. And so I sort of said to my editor and bosses, I really would I would think I'd be happier. Like I've lost the will to keep writing about investment banking given what it's doing. And I would really like to explore stories with bankers that are really trying to use their institutions for a social and environmental good.
This was, I guess, around 2010. That's kind of early doors in a way for this. And so what defines sustainable finance at that point in time? What did it mean to you entering as a sustainable finance journalist at that time?
Yeah, I don't even know if we called it that at the time. It was early. I mean, I don't think the FT was even really covering it then. And we were one of the early trades. The main sort of chat was around impact investing. That was kind of, GIN was set up and people wanted to talk about that. And because of what had happened in the crisis, actually the interesting point was you go into banks, Goldman's and Bank of America and Citi and JP Morgan, and say, you're doing this, you've got this incredible urban program. I remember Goldman Sachs had this amazing program where it was working on financing businesses in areas that were underinvested in, basically. So it had like a community aspect. It would hire local jobs, and it was an amazing program. And they were dotted all around. Like Citi had an incredible microfinance program. But when you said to them, "Can we write about it?" they said, "Well, we've never really looked at it as like a thing. It's just a kind of a thing we do on the side." And they were a bit nervous to talk about it, given that it might look like they were sweeping everything else under the carpet and now showcasing what we would call like a greenwash type stuff today, which it wasn't. But you know what I mean? Like that kind of sense of their reputation might come under attack if they start to have positive stories go out about them. And I was just thought, we can't have this, because we need to share your learnings with each other and actually start promoting these kinds of actions within banks. Slowly managed to build relationships where they were able to talk to me more about the things they were doing. And then one of the surefire ways that you can help banks talk more about what they're doing on that side is you set up awards. And Euromoney had a very big annual global awards program for banks. And so I just said to my editor, well, let's do Global Sustainable Finance Bank of the Year and Bank for Microfinance and Bank for Diversity and Inclusion, because they'll all submit and we'll get to know more what they're doing and we can talk to them more about it. So that's the route we took. So it was a journey with the banks, but also a journey for my magazine, because they were like, well, if we're not making any commercial advertising against it, can this really work? But actually, it really worked.
You did that almost 10 years. How did that affect your thinking at the time?
It made me, I think, appreciate the role of finance more. I mean, I had basically written off the finance sector after the crash, but I could see that it could be really used for good if the right leaders are in place. So it kind of brought me back around to this idea that finance really can solve some of the largest problems that we have, and probably is one of the biggest tools we have for the change that we need to see. Then somewhere along that path, I covered a lot of social finance, which I was really passionate about. But it was about 2017 that I started, maybe 16, started talking to people about nature finance. And back then it was called conservation finance. And that really got my attention, because it married two things that were, well, I was really interested in the natural environment. And so I kind of jumped on that, really.
Somewhere around 2020, you moved out of America and back to the UK and joined the GFI, which is what we'll refer to the Green Finance Institute, which is where you're at now. How did that move come about, and what really attracted you to this organization?
I mean, I loved being a journalist, and I miss it, actually. I think journalists, now I'm out of it, wield so much power, and I think we see that now much more in our political environment as well. But I did feel like I wanted to do the doing and not just write about it. And so I was looking for an organization that was actually really doing it, not just making commitments, which I saw a lot of as a journalist, a lot of announcements, initiatives and workshops and whatnot, but actually doing the doing. And I had interviewed our CEO, Anne-Marie Thomas, for an article for Euromoney and thought, gosh, like they're actually doing what needs to be done. And then for personal reasons, I've been in New York 15 years at that time, maybe even longer, and just wanted to come back for a bit. So I was very lucky that they had a position to come and work for them and explore nature as a thematic within their program. And so I came back and joined them.
But it is an NGO and not a capital allocator. You didn't want to write about it. You wanted to do it.
So I'm not doing it. You're saying
no, I'm just saying that it is different than someone who's allocating capital and living and dying by their numbers and eating what they kill.
So what I sort of saw was that we weren't ready, and in nature finance we can talk about this, about whether we're ready to actually start allocating capital. There was so much underneath that needed to be built, because ultimately the money has to come down into the real economy. And for that to work, it means you're dealing with local government and national government policy and how that fits into international policy. And do you even have the right workforce that can then actually, build whatever is your EV chargers or do your peatland restoration? Like all these other things need to be unlocked for finance to then flow. And very few people focus on how you unlock that stuff. And GFI does. What I saw very quickly was it is not glamorous at all. That it's very glamorous to go around the world and say you're allocating billions to some natural capital fund, but it is not going to move unless people are doing the very unglamorous job of having meetings with communities and local governments and feeding that back into policy and ensuring that the policy changes feed into regulatory changes that feed into like workforce development if that's needed. All of that, like from the tax system, then how that works to unlock some of those barriers so that things can be delivered from supply demand on the ground that the investment can come into. No one really does that. And GFI, I just fell in love with the fact that they did that.
You, over the years, have volunteered or been on board activities that you consider important. There's a few that you are currently allocating some of your time to that you feel is worthwhile mentioning.
Yeah, I suppose I'm a non-exec director on the board of Highlands Rewilding, which is a wonderful company up in the Highlands of Scotland. They have 3 sites that they are developing sort of natural capital, I want to say products, but essentially it's a restoration project working very closely with communities and considering, one of the challenges is you need affordable housing on land that also needs to be restored. So how do you work with the community to bring those two together? And then developing a business model, either through the sale of carbon credits or future biodiversity credits. So I sit on that board.
You are somewhat of the Renaissance woman. You're a minister and a yoga teacher, an amateur astronomer. These are very disparate interests.
I had a very full and rich life in New York, I would say, where I got to explore many things in my 20s and 30s. And so very fortunate to have co-run a yoga studio, and I teach yoga and meditation, and spent a time with a wonderful company called SLU, which allows you to sort of direct these very large telescopes from your laptop so you can see into the universe from your home, which is really amazing. And I did some work for them for a couple of years.
Well, how cool is that? I understand you now live on Hampstead Heath, and your husband actually runs the Heath. So tell me about that.
Yeah, we're very, very lucky. He works for New York government and ran all their community gardens when we lived in New York. And we moved back, and he ran Crystal Palace Park, which is another park in London. And then more recently, about a year ago, got a job working for City of London, where he runs several North London spaces, but one of which is Hampstead Heath. And his job comes with a house in the Heath. So we're extremely, extremely lucky. We live in a lovely park called Golders Hill Park, which is within the Heath, which has donkeys and lemurs and obviously non-native species here. But it's just wonderful to actually live in nature in the city.
One of these times I'm going to have to go outside zone 1 and 2 and actually have a look-see.
Yeah, I think we're still zone 2 technically.
Is it? Okay, well then it's okay.
Yeah, if you haven't been to Hampstead, it is very charming. It's wonderful.
So on this podcast, I cover all the major asset classes, and the audience is global. So surely there's some proportion of people listening that will not be familiar with the Green Finance Institute. So maybe we could start with an overview of the GFI and you can tell me what it is, and maybe go back to the beginning and describe the origins of the GFI, and then what's the present day mission and how's it structured and your particular role there.
The UK government had a green finance strategy. It's now on its version 2. But one recommendation within that strategy was to set up an institute like GFI, and it ended up being GFI, that would really work on those barriers to allowing the flow of large-scale capital into net zero investments and nature positive investments. So nature was sort of a bit of an add-on. Even 5 years ago when GFI was set up, natural capital wasn't really part of the debate particularly. So it was seed funded by government and the City of London, although now predominantly we are funded philanthropically, so we are a not-for-profit. And we work very much on a focus of, we work with the finance sector, the commercial sector, so businesses, academia, the third sector, to understand what the barriers are to the capital flowing into the decarbonisation of road transport, for example, energy efficiency of built environment across the UK, sustainable aviation fuels, carbon dioxide removals. We sort of see where the gaps are, and then convene various sectors together, so cross-sector convening to understand what the barriers are, and then co-design solutions. So in sectors like decarbonisation of road transport, there are products that you can build with the financial institutions that can allow money to flow. And in the built environment, for example, it's green mortgages. And some of my team have been instrumental in building the green mortgage market in the UK. So we do work very close with the finance sector and helping co-design those products and really just elevating those out. It's very different in nature because it's so nascent that the idea of financial products around nature restoration is still quite far off. So the nature team, we're 7, we tend to focus on what are some of the policy barriers that we can start to work through, or what are the building blocks that we've seen in climate that we can start to replicate in nature that will get us to a place where ultimately we'll have products, funds that can actually move large amounts of capital into nature restoration.
Describe the GFI's theory of change, and since you're the director of the GFI Hive, which I guess, is that the nature part? I don't know.
Yeah, that's our nature team name, yeah.
Explain specifically what is your theory of change for nature positive outcomes, if that differs in some ways from the overall GFI theory of change.
There are 2 challenges we're trying to solve for at the moment. One is we need to get money out the door as quickly as possible into nature restoration, so we bend the curve on biodiversity loss, which is of course compounding with climate change. We can talk about that later and how that's not captured. So how do we do that? There are certain instruments that allow for that. Nature markets, like nature-based carbon markets. There's biodiversity net gain, so compliance markets that exist, mitigation banking. There are some supply chain models, but these are sort of things that you can get going fairly quickly, depends, and get money out the door now from the private sector into nature restoration, or certainly reducing impact and hopefully having a net gain positive impact. So we work a lot on what are the underpinnings to create nature markets, what needs to be done, so the supply, the demand, the market infrastructure. And then the other piece is what we need to do to get the billions and trillions flowing is embed nature, sort of transition to an economy really that values and invests in the natural environment. And that is a trajectory that we might have seen with climate, where you had TCFD, and now in nature we have TNFD, which we host a secretariat for, the Task Force on Nature-Related Financial Disclosures. So it's like you start off with getting companies aware of their risks and their impacts on nature and disclosing them. Then you'll build taxonomies around them, so you can put some guardrails around what investment in nature restoration is. And it's sort of that trajectory that's a much longer trajectory, one that we need to take. So I guess the theory is that we need to get private sector capital moving. We can't rely on the public sector alone. And so we're just working on these 2 kind of pathways to making that change.
Give me a definition of natural capital, or sometimes referred to as nature-based capital, and explain to me, why should this be important to investors?
The way I think about the challenge is, said we're focusing on climate, but we're really just focusing on carbon emission reduction. It's a shame that ultimately we didn't start with the natural environment, of which climate and carbon is a subset, a very, very important one, but a subset. We've gone kind of the other way around. So what we've missed in our whole climate finance journey is that nature degradation compounds with climate risk. So if you have a drought and your soil health is poor, you are going to have a worse drought, which will make your soil health poorer. And so it goes on. We haven't captured any of that part of the equation in our climate risk analysis. No central bank has yet either. So we are under an assumption that we have a certain level of climate risk that is completely underestimating the level of climate risk we actually have because we've ignored nature. So that's kind of nature just as part of climate, just to try and get people's attention that if you think you're doing climate, you're not, if you're not capturing nature degradation as well. And the soil health is just one example. So that's one reason, like we're not capturing the risk. And then the second, which is just an obvious one, really, when I think of natural capital, it's all the things we're missing. So it's plastics in the ocean and other pollution of our oceans. It's water quality that we're destroying at the moment. It's also water shortages through some of the actions we're taking on land, how we're increasing flooding by not taking care of the environment of a lot of landscapes, through the things that would absorb water. There are just so many different parts of the natural environment that we're not capturing at the moment. And we call it nature. And the pushback we get from lots of billionaires and asset managers is that it's so wishy-washy. And it kind of is, because nature is like everything. It's our entire planet. It's you and me. We're part of nature. And so people find it quite hard to define. But if we don't invest in what's called our natural capital, so our forests and our soils, then we have no planet. So it's a bit of a no-brainer, but getting people to kind of understand that we need to invest in our natural capital is really quite challenging at the moment, because they say, no, we're focused on climate. I say, you're not focused on climate, you're focused on carbon.
What is the problem or the problems that the GFI is trying to solve, and why do you at the GFI need to focus on the nature space? I feel like I'm trying to pick up a fish here.
We are, as I say, a not-for-profit, and we are entirely neutral. So we benefit from that. We work with government on some pieces of work. We advise government, like others, but we can also speak the language of the finance sector. My CEO came from Barclays Bank. Many of my colleagues came out of banking. So we're able to have that conversation and kind of sort of look at policy, look at what's happening on the ground, but also look at finance. So that's why I think we're in a position that we are. On nature, there aren't, although, even just in the 4.5 years I've been with GFI, there weren't many people at the time who could thread the needle. You had NGOs who worked on nature restoration and conservation, and they got money from grants and donations, and that's what they did. And they didn't think in terms of what am I doing for business in terms of restoring nature? Should business be paying? If I'm restoring watersheds, shouldn't business that benefits from the improved quality and amount of water, shouldn't they be paying for watersheds? So we're able to sort of have that conversation. So one of the things we've done is really work with essentially the supply side, which is farmers and land managers and NGOs, in trying to help them think through how could you attract private sector capital into what you want to do in terms of nature restoration and conservation. In the UK, there are 2 investment readiness funds that were set up by Scottish Government and then by DEFRA in England. And they pay grants to farmers and NGOs and land managers to help figure out what kind of business case could I have here. So could I sell carbon sequestration and carbon credits? And would that money then help me plant trees, for example? And can I improve this habitat and sell into biodiversity net gain units to a property developer? And we have worked with the supply side on that journey and developed toolkits to help them think through, because it's a whole new language for them to think about that. So it's a bit of a shift in mindset. And then we work with companies to help them understand, because they say, what's nature got to do with my business case? Like, I can't convince the boards that nature's important. So we've done lots of research and analysis, and we work very closely with the TNFD, because we host the Secretariat and run the consultation group in the UK, to sort of talk to them about what is your business resilience impact from nature degradation in a landscape. Maybe it's that the compounding risk with climate means that your workforce will reduce.
Where is the value in a natural capital strategy? Because I suppose people are looking somehow to quantify or look for return. Where is the value in that when you're trying to crowd in private investors?
So if you're an investor in any company, you're looking for a company, I would think, that is going to be resilient and that is on top of its physical risks and is adapting for them. And the truth is that most companies aren't looking at their natural capital risk. If you are a water company or a beverage company that's reliant on water, yes, you probably are. And if you're an energy company that is, or some of the tech companies we're seeing in the US are really aware of the amount of water that they're using and how they're going to have to replenish some of that water. So there is an awareness growing of businesses that we can't just keep taking and taking from a natural environment. We've got to start putting back in, otherwise it's going to affect our businesses. Our argument is that if you don't know what your impact and your dependencies are on the natural environment, you don't know that your business is going to survive. So the Task Force on Nature-related Financial Disclosures is a global framework that allows companies to start doing that analysis of like, okay, where am I located and what's the impact on natural capital that my company is creating, but also what are my dependencies. So if you're an investor and you're investing in a firm that isn't doing that, you're investing in a firm that doesn't know that it's going to be around for the long term. And that is a huge risk. And the finance sector really understands that, especially on TNFD. We've worked with tons of asset managers and banks who really understand the fact they need to work with their clients to understand that level of risk. So that's one thing I think is really clear. On where is less clear, I think, is where is the sort of opportunity side? Like, what can I invest in? What are the companies of the future? So, you might think about precision ag. If we're going to move to a world where we actually really are going to reduce our nutrient load in soils because we need to improve soil health, and it's written in the Global Biodiversity Framework that we need to reduce nutrients. Should you be investing in those kinds of technologies and within larger companies in agriculture that are using those technologies? And that's possibly where it's like starting to be in the opportunity side. Some investors are more like, we want to set up a natural capital fund and own land, in which case you'll be buying land that is going to be restoring land and then selling carbon credits, which we anticipate the price of carbon credits to increase, the nature-based carbon credits. And there might be potentially a biodiversity type credit market down the line. We don't know. Or you just might be selling some of those benefits into businesses who want to shore up their own resilience at a landscape level. So there's an opportunity there. But I think that's a more challenging route to go because the returns aren't huge.
It feels like nature degradation and biodiversity loss are equally as detrimental towards climate change and global ecosystem instability as greenhouse gas emissions. Why do you think climate change and carbon has been more in focus while nature has been kind of a red-headed stepchild and taken a backseat on this whole global sustainability agenda?
I think it just got the attention first. I would really think about this because I look at what happened. Like, I often think, how did the Paris Agreement get done? And what you had there was you had very vocal people within the corporate sector, like Paul Polman, who was CEO of Unilever at that time, the IKEA CEO. They were pushing. China had gone through some natural catastrophes, and so it was based on climate change. So they were sort of more engaged in climate change, and you had Obama in there as well for some of that period, who was going to push for it. So you had these leaders across politics, like the global governments, the leading governments, and these leading multinational companies who understood and were pushing for it. Plus you had like an activist sector coming through that was really pushing for it. And you had the Pope come out and say climate change was important. So you had all this kind of these things happening at the same time. And on nature, one of the biggest challenges we have is we don't have that global personality in, a leader actually pushing for us to tackle nature degradation. And when we talk to philanthropists, they point out, like, there's no one here telling us what to do, why it's important. No one's pushing on this door on nature. And it's a real problem. And we talk about it all the time. Like, how can we galvanize as much interest for this incredibly important thing? I mean, even if we tackle climate change, but we've lost all of our ocean, our oceans are poisoned and our waters are poisoned. What are we going to do? Like, it's crazy that we're leaving it on the shelf for the moment. I think there's just a lack of interest. It might be the politics has changed. Like, we've moved into a world where it's short-term thinking in voting. unfortunately. I'm not ever sure it was more than that, but it certainly feels short-termist now.
I've seen estimates that somewhere north of 1 trillion US dollars is needed by 2030 to restore and maintain biodiversity. I'm not sure I understand how those numbers are calculated, but currently global investment into biodiversity is something like 200 billion per year. Again, I'm not sure where those numbers all come from. What is the role of private investment in achieving nature positive outcomes?
So at the moment, as I mentioned, there's no real teeth for businesses. There's no real push and drive on businesses to actually pay for the natural environment that they use, what we call externalities, to pay for the cleanup that they cause, or to even just pay for what they're using. So we need to change that. But also we need companies to pay for the transition. So if you're a supermarket, and how can we get you and all those through the supply chain to help pay a farmer to transition to a nature positive or a nature friendly way of farming? And many farmers do farm in a nature friendly way. And how do we get that to be improved? Because farmers don't have any money, so someone's got to pay for it. So we really need them to pay for it. But I say we don't have any regulation demanding that our businesses start to pay, which also means if you're in the finance sector, you've got nothing to invest in because businesses aren't changing their practices. So we're in a really difficult situation. So one of the things we've been looking at with WWF UK is this sort of what we call nature positive pathways, which nature positive itself is a term that is also a bit challenging, because what does that mean? Nature gets so broad, and what's positive mean? But what we're saying is we've got a global biodiversity framework with goals and targets, and every country has been asked, who's a signatory, has been asked to create a national biodiversity action strategy plan to update it. So taking the UK as an example, we have it's an MBSAP, that's what it's called. And we have in England an environmental improvement plan with the Environment Act. So there's a bill saying all the things that we need to do with our environment. We've not said, what do we expect businesses to contribute towards those targets, whether it's our global targets or our domestic targets? We need to figure out what we're going to ask of a business. So we're saying, like we have in net zero, there is the net zero pathways, which can tell you what you expect each sector to contribute. We need the same for nature. We need to say, okay, when it comes to water quality, which sectors are the priority sectors that are going to have to step up here and hit some of these targets, and therefore they'll have to invest in whatever they've got to invest in. So I think without that guidance, we're never going to get businesses, because there's businesses say, okay, I do my disclosures on TNFD and I figure out what my impacts are, my dependencies. What do you want me to do? Like, what benefit is it to me to start to move unless I can see like a direct business case? Like, what is it? So we really need to start pushing on business to play a role here in meeting our global nature targets. And I think that's really the first step. So we're on a bit of a journey, and it's a journey that's going to take longer than a decade.
But if we're going to crowd in private investment, the private sector investment's all about risk return. So explain how natural capital is investable, or maybe you have an example or two of a natural capital investment strategy. And ultimately, if we're going to crowd in investment, what kind of financial returns are required to really get capital flowing? Because that's how the capital is going to flow in, is if there's a return. Otherwise, we're really back to talking almost like about philanthropy or grants and that sort of thing.
This is the challenge, I think. So there are several different approaches to getting capital moving into nature, whether we want to call it restoration or less harm, and the other way around. So there's quite a few private equity funds, which again are investing in sort of those new technologies, whether it's, seaweed technologies or sustainable fisheries solutions, alternative plastics, precision ag, and some of the ag type of technologies. So those exist. On the kind of public equity side, I think it's very limited. Some funds will claim that they're investing in businesses that are nature positive, but there are very few businesses that are nature positive. Perhaps they're on a transition, and that's warranted, but that is not a big area of capital. On the debt side, I think we will start to see more sustainability linked notes which have nature KPIs within them, and maybe expanding green bonds not expanding them, but having more nature KPIs within green bonds. But again, businesses need to know what's okay as a KPI, what they should be aiming for. And then we have that piece, which is investing in land, which comes with its own challenges because, do we want land under ownership of large corporates, etc.? But that, and there are some lease models that are really good. But even those, unless it's sustainable timber or sustainable agriculture at a very large scale, which you can achieve in like the US and Australia, for example, those are quite hard to find the returns on that are the 12 to 20% that a lot of financial institutions are demanding. Honestly, in some of these projects, it's more like sub 5%.
You direct the nature program at the GFI. Can you walk through the areas that you're focusing on?
So we work on supporting the growth of nature markets within the UK. So in the UK, we have carbon markets, voluntary, peatland and woodland, and then some others being developed. And we have 2 compliance markets, biodiversity net gain and nutrient neutrality, which are just England. I mentioned the investment readiness funds that we've supported and advised Scotland and England on, and building that supply. And now we're trying to work with the demand side. But there's also a whole bunch of market infrastructure that needs to be developed, like standards. So we work on how those standards can be developed. How do they run well? What's the governance structure? We feed that into policy by convening groups and then feeding in. So that's kind of one piece. How do we get nature markets working? And now we have, we received some funding from the Moore Foundation to look at, well, can we take that kind of thinking internationally? Because every country that's signed up to the Global Biodiversity Framework is going to have a challenge of how am I going to get this money out the door? And nature markets offer a route, just one route to doing that. So can we showcase some of those models that are working, not just in the UK, the US has incredible nature markets, and see if we can work with governments to replicate some of those markets, which may take 3 years to set up the infrastructure for, but at least it's this side of 2030 that we start to get money moving. That's another part. And then we look at that really long trajectory of how do we transition the entire economy. So I mentioned we host the TNFD and work with probably over 700 corporates across the UK on how they're going to think about nature-related risk. Produced a report with the University of Oxford and University of Reading and other technical partners, UNEP-WCMC earlier this year, that actually went deep into actually what's the economic risk to the UK of nature risk, which was incredible. It's actually higher than climate. And we did this report to try and help prove to our central bank and to government, I think, sort of understand it, but to business, that nature risk is not something you can just say it's not relevant to me. It's actually something we should be tackling as an issue of systemic risk, and to feed into that global systemic risk debate that the NGFS is having, the Network for Greening Financial System. So that's kind of the second part. So those are, and then MPPs is the National Nature Positive Pathways is part of that. We have a team that works on the taxonomy, that's not under me, but the green taxonomy and how nature plays a role in the UK green taxonomy, that's really, really important piece. So those are kind of the major pieces we work on. And then within that, we'll focus on natural flood management or biodiversity, carbon.
Why are these areas underfunded? Is it just because there's no standardized reporting on these risks or the negative returns of nature degradation? Or
from my recollection of when I started out covering sustainable finance back in 2010, was that everyone was banging on the doors of the big banks and saying stop funding fossil fuels, and they said, actually, there's no business risk to me at the moment because a lot of these are like 3-year, 5-year loans and there's no stranded asset risk in the next 3 to 5 years. So I'm just going to keep on financing it. And I think until you start to show that there is a reputational risk, a litigation risk, a physical risk, and what those risks are, you're just going to have business as usual. And I think in nature, we've just not got to that point where people really understand. I mean, yes, if you're, there've been cases of, as I say, a beverage company which has been sued for using too much of a water supply, or there's plenty of water utilities that are not doing great things with waterways that are under pressure as well and always getting bad press, and that impacts their share price. There's some obvious examples, but I think people don't think of them as nature. I think it's such a strange word for us almost, nature, because it's just who we are. It's like, you know that thing where you say, trying to explain to a fish what water is, and they're like, what are you talking about? It's almost like that. We've got to kind of reframe our relationship with nature as being one that is here for our survival and our economic prosperity, which can feel a bit tasteless, to be honest, given like nature is something that's very soulful and now we're talking about it in economic terms. But otherwise, I don't know how we start to move the conversation forward with business, because they don't think about it in soulful terms. As an organization, probably individually they do.
You say you're working with 100 corporates or businesses, and you're primarily UK, but now you're focusing abroad. The problems are the same everywhere. This isn't a UK issue. Could you give me one or two tangible examples of commercial solutions that the GFI has developed that you feel demonstrably increased capital flow into these verticals? And what was the process that it took to get there with those?
Yeah, I'd love to say we developed them, but we haven't developed them. I can point to ones that have been developed. So obviously I think I've covered like nature markets and these compliance markets, and they are extremely helpful. You've got mitigation banking in the US, which has moved a lot of money. Whether it's really turned the tide on nature degradation is another thing. You've got to consider that, but it has got money out the door. So, I mean, there are a lot of great models. We've got tons of case studies on our website, probably got like 40 case studies up now. One of my favorites, just because it's a really interesting model for a finance perspective, is Tropical Asia Finance Facility. It might be called TAF2 is how I know it. It was set up by New Forest. It's quite old now, but essentially it was an investment into sustainable forestry in Southeast Asia, but it had social benefits built in and uplifting biodiversity. So it wasn't going to be monoculture. It was going to be managed in a way that would support biodiversity. Now, to get that over the line, it required impact investors to come in who would take a lower rate of interest. But what they were fine with was that by taking that lower rate of interest and allowing commercial investors to come in and take 12+%, that they were going to get so much more money in that it would have a much larger impact on a landscape scale. So I love that model, and I don't know why we're not doing that more, where we can find some investors who are happy to take a 4%, which allows other investors to take the 12% that they need.
That's referred to as blended finance.
I always think of blended finance with someone taking 0. But they were taking 4%, and it wasn't a government.
It's just having a different layers of investors with different objectives.
And I think our philanthropic community, if I can be bold to say that, maybe isn't thinking in terms of these catalytic ways that they can use their spending. They, fund conservation projects. And I understand why, because there's an urgency, like, oh my God, let's just quickly save this species, when they could also be thinking about how do I use my money to crowd in more private sector capital. So that's one. Obviously, some of the Belize bonds, which are extremely complicated structures, and some of those have been really, really interesting and are being replicated.
Like with the Belize bonds, I mean, can you explain what the GFI did? Did you develop the idea and bring people together, or how did that work?
Essentially, what we do is we share the detail of those models. So we have a database and case studies. And this is only recent for us because we've received funding to do so, we'll work with those that designed them to replicate them elsewhere. So we can approach other governments, because we're working with UNDP and UNEP-FI on this international project, and through our own work with international governments. We can approach international governments. We have a huge network of corporates and multinationals that we can find where you can replicate those models, and then work with those that have designed it to help them replicate them elsewhere. So we're almost like a support system.
You're taking good ideas and amplifying them and disseminating them as best practices, so to speak.
And trying to sort of support those that developed them in replicating them elsewhere. One of the reasons I want to work for GFI is because it means so much to be in this neutral position where you're not up against someone commercially. So it just means we can have much more open conversations and help others elevate. What I don't want to do is go into competition with anyone who's, TNC does an incredible job at developing some of these projects. Finance Earth is another one that does.
Who do you think holds the primary responsibility for natural capital preservation? And what can we do to get them to take the responsibility?
The ultimate responsibility is government, isn't it? Because they set the rules. They set the rules of engagement for business, and they have the oversight over an entire nation. So, they should understand what the natural capital account is, how that's been depleted, what is their framework for change on that landscape or marinescape if it's a seascape, and then how they're going to deliver it and how they're going to get the private sector to deliver it. And I think, we've seen governments sign up to the Global Biodiversity Framework. What we haven't seen now is them starting to figure out how they're going to get business to play ball. And that, I think, is going to be the sticking point of hitting those goals.
So do you see it as a political issue, or is it just a government ineffectiveness issue?
Is it a political issue? I think it can be when it starts to come down to, if you're going to make businesses act a certain way in your nation, then how does that affect you competitively elsewhere? It has to be a global approach, because otherwise it will be politicized. It hasn't yet. And I've always thought that net zero is often focused on what's being taken away, what you have to give up your flying, give up your car. And so it can have a bit of a negative, give up your wonderful oil and gas, it can have a negative approach. Whereas nature is, people love nature, people want more of it. Why can't we have more of it? It doesn't make any sense. Why aren't we looking after soil health? I mean, it's just obvious stuff. So it hasn't been politicized at the moment, but I do think it could be, because it will be industry versus nature. So we have to make this point that nature is infrastructure and that our industry cannot survive without it. And that's going to be a challenge. And I think that's where government leadership is really needed.
Another way to view it could be the carrot and the stick. Part of the reason that I've done this podcast is I feel that in some cases, the argument for responsible investment and so forth just hasn't been well made, because if this is actually a better way of investing, it should be borne out if we're accurately accounting for the returns on investment. It should be logical. So in that way, it's more of a carrot as opposed to government coming in with a stick and saying, you've got to fill out these ESG forms or whatever. In a way, I feel like some of what is referred to on the other side of the Atlantic as the ESG backlash and all that is because it's been forced on people without demonstrating that it's actually a better way to invest. And of course, there's charlatans gaming the system and all that, that's for sure, as happens whenever new markets emerge. But in the long run, this should become obvious. And if it is a better way to invest, meaning producing better returns in the long run, should be something that investors demand. It's pull-through marketing. The investors will demand that because it'll be better for their investment, right? And sometimes I feel like we just haven't done a good job on explaining to investors or to the markets. And some of that could be maybe we've got inadequate accounting systems that don't actually fully capture the full cost of things so that the returns are artificially inflated.
That's exactly where we are. The problem is about being forced on people. The problem is by the time investors start saying, oh, this is a good idea, we'll have gone past the point of no return.
You've discussed today how much the functionality and growth of the economy depends on natural capital, but we've also discussed how C-suite executives still seem to struggle to take the responsibility. So what can we do, or what needs to change to engage these executives on the agenda?
I think we have to make the business case more clearly. And there's always this story someone told me about how someone went into the board and started talking about nature risk and all the various taxa of flora and fauna, and everyone was like, okay, this is we're done now. So it's not using that, but actually just talking to it about business case. So one of the things we're hoping to do, just for example, and this could be replicated anywhere, is in one region of England, there's it suffers from drought and flood and coastal flood and inland flood. And it's got a huge agricultural landscape as well that's at risk from climate, but also this compound nature degradation and climate. So we are hoping to work with 5 or 6 companies whose workforce is reliant on that landscape. So maybe they're headquartered there, or their supply chain in some way, or, they're a railroad company that runs through it, or a highways company, and figure out what is your climate and nature risk from this landscape, and what's the cost of capital as a result of that, and can we take that cost to you once proven and transfer it into paying for nature-based solutions on land. And there's a lot of land managers and farmers who are happy to deliver that in that landscape. And I think if we don't start going down to that granular level where you work with businesses to start proving that your climate and nature risk is a business case issue and that there are solutions for you because you can invest in XYZ and nature-based solutions, I don't think we're going to get anywhere, because we're just going to keep batted off that nature's not a business case issue. Some businesses get it. Reckitt's is one I always talk about. I don't know if you know Reckitt's, but they own Durex. So Reckitt's is incredibly worried about its rubber supply chain and what the impacts of climate can be, and also just that sort of undersupply because of over extraction or whatever of rubber. They're really cautious about it, and so of changing their business model to shore up their rubber supply because it's their business case. But how can we sort of make that kind of scenario, which seems so obvious, into a scenario that every company is looking at when it comes to nature specifically?
Who is Reckitt's?
They're a large firm, Reckitt's. They own a whole bunch of brands that you probably know, but one of them is Durex.
I wanted to ask about reporting standards at TNFD. You've mentioned it several times. I'd like you to comment on how effective that could be in generating engagement. But before you explain it, why don't you explain to the listeners what is TNFD? Because in the financial business, we love acronyms.
TNFD is the Task Force on Nature-Related Financial Disclosures. It was developed, actually it was the brainchild of a gentleman called Andrew Mitchell back in probably 2018. And then it got turned into a working group. Actually, my CEO was a co-chair of that working group, and then launched, formally the framework at least, launched last year. And essentially it's built a framework for companies, any company around the world, to be able to assess its impacts and its dependencies on the natural environment, and then produce a report similar to the TCFD. It's worked off the framework of TCFD so that people can, not have to think too much on how they're going to report what those, or disclose rather, the impacts and dependencies. And it follows something called the LEAP approach, which is locate where your businesses are. Amazing that many businesses haven't even done that. Evaluate what your impacts and dependencies are. Assess what's the level of risk. Maybe you have no risk, and then sort of prepare to report on that. But that framework has been developed with global institutions. It's market-led, but it works very, very closely with NGOs and Indigenous peoples as well, because of the importance of those groups when it comes to preservation of nature. So we have this amazing framework, and they're constantly updating it and providing more feedback to help companies really work with it across different sectors. So it's an incredible piece of work. But of course, it's not a standard. And so at the moment, there's discussions around ISSB, which obviously is a standard, is looking at nature. And the hope is obviously that it might, I'm not speaking for GFI, not speaking for TNFD, it might incorporate TNFD within that.
We're seeing that movement in the development and the deployment of complementary financial products. And you've referred to some of these today when we're discussing some of this, like carbon credits and biodiversity credits. Maybe you could explain what these are and what is their scope to actually make an impact from a nature perspective, from what you're working on.
Carbon, I think, is probably fastest route at the moment to getting money out the door for biodiversity, dependent on the integrity of the project. For example, it's not, you're not planting monoculture forests of trees to sequester carbon, because some trees sequester very quickly, but maybe they're not in the right tree in the right place and they're not right for biodiversity. Those markets are taking off. The challenge with carbon markets at the moment is, one, they've had a lot of negative press from certain media outlets, which is unfortunate, and has given an excuse to people to say, well, I'm not going to take part then, which is a real shame, because there are some incredibly good projects that do nature-based carbon. Some projects will sell carbon with like what they call charismatic carbon, or there's a biodiversity uplift embedded in the price, so it can help the price elevate somewhat. There's an amazing project in Scotland I always talk about, and it's called Trees for Life. It's an NGO focused on planting millions of trees across the Highlands because they've been decimated, and rewilding, works with the community, gives a portion of the profits back to the community for more community nature restoration projects. But they sell their carbon sequestration, I don't know, it's more than £75, because they have this wonderful story and there's so much biodiversity in there. And there's lots of projects like that so carbon markets can allow you to get money out the door for biodiversity and community projects if they're run well. But that kind of price is quite rare. Like typically it's about £25, which really doesn't cover the price of, the maintenance on these forests as you plant them, unless only in some developing countries at the moment. So, but carbon, I think, is nature-based carbon is really a way that we can get money out the door quick.
And what about biodiversity credits?
Biodiversity credits, this is what everyone wants to talk about at the moment, and I don't think anyone's settled on what it's going to look like, although we've had guidance from some great organisations on it, the Biodiversity Credit Alliance and the IAPB. So essentially, they want to do the same. People want the same for carbon and biodiversity, but it's nigh on impossible because carbon is a unit that's in the atmosphere and biodiversity is very much local. So how can you ever have a global biodiversity credit? Like if I restore a wetland in Scotland, it's very different to a forest in Tanzania. They're not the same. So the challenge at the moment, what is that market going to look like? We have biodiversity units, like through biodiversity net gain and mitigation banking, which is the compliance market, but it's domestic. And I think my personal opinion is that's the way we'll go, that there'll be domestically developed biodiversity credit or certificate type markets, but they'll never be traded in a secondary market. I mean, how can you do that when biodiversity is so localized?
What are some of the limitations of complementary financial instruments that need to be addressed or could be addressed to make it part of the solution?
Obviously, there's the issue of integrity, and actually, are they delivering what they say they're delivering? And some of that you will have to build in to some of these projects the chance for failure. I mean, you might have a wildfire sweep through and you've lost your carbon sequestration, for example, or it might just not work as well as it did.
What do you see over the next 5 years? What are the biggest things that need to change to progress towards a nature positive economy?
I think we need to get businesses on board. I think that's the only way. How do we do that? Do we do it through, to what you were talking about, through a stick, through regulation, or is there some sort of carrot? Or as my colleague says, there's a carrot on a stick. Which I love. So maybe there's like some co-design, yeah.
That's your campaign, carrots on a stick.
Or I don't know if it's a stick made of a carrot. I'm not sure where she was going, but she had a really good point.
Wrap and put a bow on things here for me. And in a few words, make the case that natural capital investing represents the next significant frontier in sustainable investing, and that we are on the cusp of something that really is an unmissable opportunity from both the financial return as well as from a sustainability perspective.
I think the way I would frame it up is that we have to be realistic in that the returns at present might not be there for natural capital investing. They are there in pockets, should I say, but not at a mass scale. However, it's going to happen pretty fast, I think, over the next 5 years. One, we do have the Global Biodiversity Framework pushing us forward that 196 signatories have signed up to. And we do have this growing recognition that nature and climate are intertwined. I don't think some of the things we've said that's fully landed, that actually if we're only capturing climate risk, we're not capturing climate risk at all if we're not capturing nature risk as well, because of the compounding impact that we've talked about. And I think that voice is only going to get stronger over the next few years, especially as we see more and more natural disasters where perhaps if we'd had nature-based solutions in place, some of that could have been held back a little bit more. So I think the noise is only going to get louder, but I do think it might take a while for the returns to really come in at the levels that we need. Now, on massive landscape scale and aggregation, yes, you can hit it. I think it's going to take a little bit of a while.
Helen, I've got a few short answer rapid fire questions I want to ask you to wrap up our talk. Just give me the first thing that comes to your mind. And if nothing comes to your mind, feel free to take a pass. If you had to name the single most important challenge in the sustainable investing space at this time, what would it be and why?
That we're not capturing the natural environment at all. We're just looking at carbon.
And we're not capturing it in our accounts. What do you know now about natural capital investing that you wish you knew back in 2020 when you started at GFI?
That it is a much slower journey than I had imagined it would be, because of the myriad of moving parts that we're having to move along.
Now, you don't have to name names, but can you describe an example of an investment project or a commercial solution? This is where it's more geared towards investors, but something that you've been involved with and you supported that you were convinced it ticked all the sustainability boxes, but in the end it didn't turn out. And what was the lessons learned from that experience?
I've seen a lot of funds start, natural capital funds, with very large ambitions, and have all sounded great, but as the years have gone on, you've realized that there's nothing for them to invest in, because we're missing the underlying point. This is not an investment question at the moment, it's a business question.
Does it mean that they don't have enough deal flow to invest in?
That's exactly it, yeah.
Okay, so we're lacking deal flow.
Yeah, and we're not unlocking the deal flow. That's the challenge.
So you would argue that there is capital. There's just no place for it to be deployed. Right. If someone wants to get into the natural capital investing space, how would you advise them to get in the business, or where should they cut their teeth?
There are a lot of great fund managers who are looking at natural capital. And so probably sort of picking one of those that's maybe been in it a little bit longer. And so they're not about to realize that, there's no deal flow, as you said, and they're about to close that down. There's a lot of great organizations like CPIC, which is the Coalition for Private Investment in Conservation. They have some investment managers in there, and also the Natural Capital Investment Alliance, which is part of the Sustainable Markets Initiative. Incredible group of fund managers who are there trying to figure that out, impacts and climate asset management, sale, foresight. There's a whole bunch. So that was probably just, I would go and have a look around. What is it they're doing, and what are you interested in? You're interested in private equity? Is it actually you want to do land purchases and leasebacks, or is it public funds, which is obviously more challenging?
I've had several people on who are solely focused on natural capital investing. There's a lot of people investing out there, but it sounds like we need a whole lot more to create more product. I've had it in public equities. I've had it in private equity. I've had someone on just the other day in VC. It's a Serena Capital in France, and he's convinced that this is the next big thing. Yeah, natural capital, nature-based capital investing. So all the different asset classes, people are definitely doing good work, but obviously we're in the front part of the runway yet before it really takes off.
England's so fragmented, and it's smaller farms than elsewhere. It's quite hard to get that landscape scale kind of size of investment up that is needed. And because land's so expensive as well, the returns that you need if you're going to opt to take land out production and plant trees is really challenging. So I love to hear you say that actually I'm on the negative side, the more of the negative side of the spectrum than some of the other people who've been on here.
I'm just saying, one who hasn't investigated this could come away thinking that this is far and few in between. But on the real asset side, there's lots of people. I've had a Charlotte Kaiser, a BTG Pactual, and she used to be at the Nature Conservancy before that. And all those stories are in back episodes here. Helen, I think we made it to the finish line. It was great talking to you, and you've been gracious with your time. I really appreciate it. I learned a lot today. You're doing great things at the Green Finance Institute, and keep up the good work. Now tell everyone about your websites and social and all that good stuff where they can go and see the things that you guys are doing with GFI.
The easiest way is if you go to greenfinanceinstitute.com, and then at the top of the page it says Hive Nature, and if you click on there, you go to another site. But that has all our case studies and all the work that we're doing, the international work, the domestic work, and the toolkits for supply side. So you can head over there, and that's where you'll find us.
Do you have social that you guys are posting things to? And where is that?
Yeah, on LinkedIn. So again, Green Finance Institute, you'll find us there, or me, Helen Avery, you'll find us on LinkedIn.
And the best way for people to contact you, is that on LinkedIn or where?
Yeah, or you can just drop me a line, helen.avery@gfi.green.
Okay, that's easy enough. All right, Helen, thanks again.
Thanks, Scott. I hope you have a lovely evening.
Goodbye, everybody.
You've been listening to SRI 360. If you enjoyed it, please hit the like button and subscribe to get future episodes. You can find an archive of all previous podcast interviews and more articles and information on SRI, ESG, impact investing, sustainable investing, and socially responsible investing at our website, sri360.com. If you'd like to read more lessons learned from world-class SRI investors, get a copy of Scott Arnell's book, Sustainable and Responsible Investing 360. It's a must-read for anyone wanting to know more about investing for positive social, environmental, and ethical impact, all with market financial returns. These are the stories and tactics of those leading the way as sustainable and responsible investing goes mainstream. Sustainable and Responsible Investing 360 is now available in hardcover, ebook, and audiobook format wherever books are sold.